Okay, good evening, everybody. Can you please let me know if you can hear me clearly in the comments before we actually get started with this? That'll be much appreciated. So please let me know if you can hear me clearly in the chat. There is a little bit of a delay between obviously me speaking here and you seeing this live. So I'll be a little bit patient on the responses here. And apologies for starting a few minutes late as well. I had to pick up a couple of things, and it took me a little while to pick everything up and get back in time for this. So please let me know if you can actually hear me. You should be able to hear me clearly, but I just want to sense check this before we jump in. Evening, Pete, Audie, and Claudio. How are you? Just let me know whether you can hear me clearly. I can see your comments coming through, but I know that there is a delay on this. All good. Perfect. Okay. Right. So a lot has happened this week, and I just wanted to maybe just provide a little bit of commentary on what's happening, and provide a few thoughts because I think for a little bit now there's been a lot of uncertainty around the markets, what's going on, so on and so forth, and what's going to happen next has always been the big question. And we're as much as we're unclear and we don't know because we're talking about looking into the future, we do have some signs right now which are not very encouraging at all. So let's start with maybe a little bit of context. I've got my iPad here, so I'm going to draw some of this out, and then I'm just going to leave you with a few thoughts. I have had a lot of questions through yesterday, today. Where are we today? Today's Thursday. Well, since Monday, really, I've had a lot of questions, particularly around mortgage rates, interest rates, and what that might mean for households. And I will do a separate video just on that. And I will try to answer in that video the question of what should you do if your fixed rate is ending in the next year or two and you're worried about interest rates rising. But before we get to that bit, this bit is important to cover because I'd like people to understand the context of what is actually happening right now. So I'm going to share here. I don't like this setup. Let's just change it to this one right here. Okay. Actually, maybe so you can get the full picture. Let me just extend this slightly. Okay, doesn't go much bigger. All right, okay. So the main thing that we've been seeing this week is we have been seeing the value of the pound fall, right? Okay, and this is against the USD. Okay, so I remember a time. Let me do this in red because it doesn't show that well in white. I mean, let's just start again here. Okay, yeah, that's much better. So the pound versus the dollar. Okay, what we've seen is we've seen the value of our pound fall versus the value of a dollar. Now, I remember times when you had the exchange rate at almost £2, well, $2 for every pound, which meant that if you're traveling to the US, you got more for your money. Now, the reason why we've seen such a massive fall this week is if you haven't watched the video where I talk about the budget on Tuesday, go and watch that video. Essentially, what the government has basically done is they have announced tax cuts at the higher rate, the additional rate taxpayer bracket of 45%, and they're borrowing a shed load of money at the same time. And what that basically has meant is that the confidence in the market, the market makers, the investors, big banks, hedge funds, they're then saying, well, actually, if you've cut your higher rate, your additional rate tax bracket of 45% because you're trying to push for growth, but still you're borrowing 150 billion over here for the initiative to help households cap their energy prices at £2,500 for the next 2 years. Well, and you're actually thinking about further tax cuts, right? So corporate tax was kept at 19%. We saw the national insurance contributions also get rolled back as well. So not only are we basically doing this, we're cutting taxes, but we're also borrowing a shed load of money. And what that has done is dented the confidence of the markets. And as a result of that, what we found is that the pound has fallen versus the dollar. Now, why does that matter? Well, that matters because as a country, we import a lot of our stuff. So we're buying a lot of foreign goods. And if you think about oil and gas and all that kind of stuff specifically, that stuff is traded in dollar. So as our pound weakens against the dollar, the price of what we're buying essentially goes up. And if you've been following me for a while and you know and understand the conversations we've been having about inflation, inflation is the increase in the cost of goods and services around you. So I don't want to say unwittingly because they would have known that this will be the case, or at least I hope that this would have been the case. But when they announced all of this stuff last Friday, and whilst there was some really good stuff in there around growing business, IR35, corporation tax being kept at 19%, low investment zones, whilst those things are all very positive for growth, for business, this right here, that tax cut has undermined the confidence that people have in us, the UK government, in actually being able to pay back the money that we're borrowing over here. So, in a roundabout way, and I say unbeknownst, hoping that they just forgot about this miraculously, what they've actually done is tank the pound, increase inflation. Now, what have we been fighting since the beginning of this year? Inflation in the form of energy prices increasing. We've had 7 Bank of England base rate increases that haven't worked. And now what's happened is because the pound has fallen to all-time lows and it's kind of recovered a little bit today, the central bank yesterday, the Bank of England yesterday said, okay, what we're going to do is we're going to come along and we're going to buy government debt. So again, if you think about gilts, which are corporate bonds, government bonds. So if the government needs to raise money, what they will say is, well, you give us money, we'll repay you back over a certain period of time with a interest rate, right? And because it's a government bond, you're lending the UK government money, you're almost guaranteed, you're a surefire to get your money back. What's been undermined is the ability of the UK government to pay back its debts. So the Bank of England has stepped in and said, we will temporarily buy all of that debt to prop up our pound. Now, hopefully you're still following this, and I will get to the comments in a moment. What has happened in the background to this is, well, because there's this intervention from the Bank of England, and they said on Monday that they will not hesitate to increase interest rates to make sure that the pound remains stable. What's happened is the lenders, the mortgage houses, the mortgage providers have got a little spooked, because the forecasts that they've been working on in terms of, right, we think rates are going to be at a certain level in the future upon which we will base our fixed rate mortgages, that's all been thrown out the window. The new forecast is that by the time we get to this point next year, interest rates will be at 6%. 6%. For what they were forecasting, this is monumental. And so what you found yesterday and the day before yesterday, well, since Monday really, is fixed rate mortgages are being pulled. I think the total number that have been pulled over the last 3 to 4 days is in the region of about 1,600 mortgage products have been pulled. And that's led to the question of, well, if you are in a fixed rate mortgage, should you be looking to pay your early repayment charge and fix into a known rate right now? Because if interest rates get to 6%, in 12 months' time, you come out of your fixed rate mortgage, you are going to see a significant increase in your mortgage payments. Now, like I said, I will do a separate video for that on its own, where I'll explain all of the options, the things that you need to consider. But let this be a moment just to pause and take stock of where we are. It is very, 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 very likely that things are going to get very, very difficult in the next few months. Now, in the video that I did a live on Instagram maybe 2 days ago, and I speculated and said, look, there was a lot of there was a lot of political, I guess, push for the Bank of England to come back with an emergency interest rate hike. Because remember, essentially what the government has done is they have inadvertently increased the cost of goods and services because the value of our pound has fallen. What they've done has been inflationary. And one of the ways that you combat inflation is by increasing interest rates. Now, the Bank of England already increased interest rates last week. And so Andrew Bailey said, actually, what we're going to do is we're not going to do anything for the time being in terms of the interest rates. We're going to wait until our next meeting in November, which is going to be on November the 3rd. I said that was probably the right thing to do because I think if he made a decision to introduce an emergency interest rate rise, that will probably spook the system a little bit more. What's happened instead of that has still kind of undermined certainly the government, certainly the Chancellor, and I guess dented confidence in the UK market still. But I still think that the interest rate and holding back on that until the 3rd of November is the right thing to do. I could be wrong, but that's just my personal view on this. We're in for a little bit of pain. And so I guess what I wanted to kind of like leave people on, and a message that I do want to leave people on, I don't like being doom and gloom. The budget has received a lot of backlash. And certainly in the video on Tuesday, I set out what I thought was good and certainly some of the red flags in that budget. I mean, one that hasn't been spoken about, which I need to do a separate video on because my God, it's horrible news, is them actually rolling back some of the Solvency II regulation. That is a disaster waiting to happen. Disaster waiting to happen. This is like putting the bankers in a room, giving them a grenade, pulling the grenade, and just being like, there you go, boys, crack on, do your best, don't drop the grenade, when they have a history of blowing things up. I almost swore there. But that's just to let you guys know how crazy this idea is. Now, whether they're going to replace it with something that is going to be at the same level, and in that separate video, I'll talk about Solvency II and where it came from and what it means. I worked in Canary Wharf. I know how this kind of stuff has been not a hindrance, but something that certainly investment houses and investment companies have had to abide to. And to a certain extent, you could argue that it has hampered some of the things that they would normally do in terms of products, services, that kind of stuff, because they simply had to have cash behind them. So, yes, if you think about it from a growth plan, would it necessarily improve and incentivize companies to maybe invest more? Yes. But it's a really bad idea. Really, really bad idea. And my concern is that you combine that with we're going to uncap your bonuses and you're waiting and asking for 2007, 2008 all over again. Really, really bad news. But what I want to say is this. We are responsible for the things that we do within our own personal finances. The government should be there to look after us as citizens. I think it's abundantly clear right now, and God knows what is going to happen at the end of this week. The Tories have got their conference in Birmingham this week, and I'm close to Birmingham. I would love to rock up and just do a vox pop, by the way, just to see what people are saying. But it is being muted right now that because it is unlikely that Liz and Kwasi Kwarteng would want to, I guess, backtrack. And the IMF has said, you need to reconsider these tax cuts because of pride. And that's the only thing I can put it down to. And if they don't budge, what is being muted right now as a possible outcome are further spending cuts. Austerity, even more. So look, I don't know what's going to happen, but I think we're in for a little bit of pain, a lot of pain. So I want to encourage everybody watching this, whether you're watching live or whether you're watching on a replay, please take responsibility for your personal finances right now. I talk about a lot of boring stuff on this channel because it is essential. Budgeting, It is absolutely crucial and essential right now. If you have debts, interest rates going up are going to impact your debt repayments. If you haven't got it into a fixed kind of like payment structure, you need to address those things now. If you are one of the 2 million people that is still sat on a variable rate mortgage or a variable rate deal like a tracker mortgage, you really need to be getting fixed 6 months ago. You have to take control over your personal finances. Now, let's be real. We're talking about money here, and money is a skill that we do not get taught in school. And so the fact and the idea of sitting down with your personal finances for people can be really, really daunting. I have to implore you and encourage you, please be courageous. Please just sit down and really get a handle on your personal finances. We cannot rely on the government to do the right thing to look after us. The intervention for the house, the energy bills, and all that kind of stuff is great. My concern with that is it's going to be around for 2 years, and if energy prices continue to rise in the next 2 years, we're going to be back to square one in 2 years' time after this initiative actually ends. Then what are we going to do? Borrow more money? So we have to take control over our own financial decisions. If that means credit card going on to a 0% balance transfer, do it now. If that means fixing your mortgage from a standard variable rate or a tracker mortgage, do it now. If it means cutting out stuff that is basically excess in your personal finance and your spending, do it now. Do not wait. Please be responsible and take charge of it yourself. I wanted to spend this time on a live to do this because if I did this as a recorded video, I don't think I would have been able to articulate this in the way that I have. This channel really is here to help people. And yes, a lot of the time I try to be as balanced as I possibly can, and I don't like doom and gloom. And I know that this is very much kind of like, it feels like the world might be ending coming from me, but I cannot stress how important it is to take control of your personal finances right now. I am in a position where my mortgage is going to come out of its fixed rate in November next year. I'm actually thinking about paying my early repayment charge to fix into a known cost rather than wait for the possibility that interest rates are at 6% and then all of a sudden my mortgage payment jumps massively. I will do another video for that specifically, and I will probably share a little bit of what I'm finding on my own journey as well. But please, guys, you know, do your due diligence and just take care of you. You run your own financial situation. Take responsibility for it. I know that there's been a lot of comments in here. I'm just going to go check these really, really quickly to see what everyone is saying. But I appreciate you for watching this. Emma, I think these world events get overexposed and monetized by content providers. Um, Look, I think there's a lot of doom and gloom. I think whenever you search YouTube, there will be doom and gloom stories. There always are. If the market goes down by 2%, there's people saying it's the end of the world and stuff. I look at the end of the day, you have to try and look at things with a level head and pragmatically. And look, if I'm completely honest, making the video on Tuesday pointing out some of the things that I think were good about the budget, like people are slating the budget, and yes, there are some bad things in there, but there are some good things in there. I think it's important to have that even ground where you can have a look at pros and cons. That's what I'm all about at the end of the day. It isn't because I'm Tory positive or anything like that. I don't trust political parties, no matter who you are, really, to be honest. But I think that just for the sake of information, certainly here in the public domain on YouTube, it's important to have as much balance as you possibly can. It's a currency war. That's the bottom line. Look, it's amazing watching Kwasi Kwarteng this week talking about, you want the bankers to do what they do and make a lot of money so that, our economy grows, but then you're telling them to stop betting against the pound. It's like you handed them this opportunity. You don't understand the beast that you're dealing with. They are bankers. They are there to make money. You handed them the opportunity where the pound tanks because of your plan, and you expect them not to sit there and be like, no, we're not going to make our clients money. It's all good. Of course, they're going to do that. That is the nature of the beast. And this is what I'm saying, that, taking away this regulation and trusting these guys to do the right thing is the wrong thing to do. 100%. It is the most alarming thing for me. And if you read the growth paper, the growth plan, I linked to it in Tuesday's video. It's tucked away in clause 3.15, and it's there as kind of like a throwaway comment. If you didn't know what Solvency 2 was, oh my God, then you might just glaze over it, but it is dangerous. The whole reason why Solvency 2 was brought in was to protect the financial system against 2007, 2008. Well, it's a safety net. And what the Tories are expecting, what they're suggesting to do, is taking away that safety net and then just letting the bankers just go for it. It's freaking crazy. I cannot stress that enough. It is absolutely mad. Let's have a look. With the pound falling, would it be better to just buy UK stocks and net for now instead of US? Not necessarily. I think the currency position. Look, if you're buying sort of the S&P 500 and it's dominated in the US, obviously if you're putting 10 grand in, it's not really, you're going to have the currency conversion, right? But I think when you're looking at UK stocks, yes, the currency is a point to consider, but you also need to have a look at the wider economic position of the UK. Remember, if the pound is tanking and the economy is doing bad, typically the companies in the FTSE All Share, the 100 to 250, will also be doing bad as well. So you're going to see that the indexes will fall. So it's not just a simple, the pound is falling, I'm just going to buy UK. You need to have a look at the whole picture. Really, really important to remember that. Someone's saying here that heard the stock market will crash around 50%. It is possible. I don't know, but that's speculation at this point, so who knows? Pensions are screwed. Look, Kwasi Kwarteng had a conversation with hedge fund managers and pension funds this week. The reason why he did that is, who buys government debt? Who did he upset? Who did he diminish when it comes to confidence of the UK being able to pay back the debt that they are issuing? The pension houses, the pension funds. So he had to go and pony up to those guys this week, and basically explain what the whole plan was about. I would have loved to have been a fly on the wall for that conversation to see whether or not they tore him a new one. And I would imagine they probably did. But the Bank of England has intervened. I think it's about £65 billion worth of government debt that they've actually bought at the moment. That's going to prop up the pension fund. Well, it's going to prop up the gilt market a little bit now, the bond market now, and that will benefit the pension funds. But yeah, the pension funds, I will not be happy about this at all. And if you hold pensions and you have a portion of it invested in the UK, and there's a UK government gilt portion of your portfolio, you will see that in your holdings as well. The USA will have to stomach this too. The problem with the West is inflicting all of these problems by design, by the politicians that keep blaming Russia for inflation when Russia never printed the money. That is a really good point, but at the same time, the US has very, very different problems to us. Their problems aren't anywhere near as severe as ours. They're not affected as much by by energy prices. They can produce their own oil. They've got massive oil reserves, so they're not as impacted as we are. Russia is still a factor, but it's not the only factor. This week is basically an own go. It's self-inflicted. We did this to ourselves for no reason at all, because the guy number 10 are just freaking clueless. It makes no sense. It's like you've put a bunch of kindergarten kids in number 10, and they just got really excited about, oh my God, we're here. Let's go get them, son. And they didn't think it through. It's just absolutely mad. And it's amazing when you hear popular investors make comments like, I don't understand how they didn't understand that the consequence of what they were going to do would be the devaluation of their currency. And ironically, Rishi Sunak warned against this. But nobody got the chance to actually vote. And it's funny because I was in a TV studio the day that Liz Truss was announced as the winner of that leadership contest. And someone asked me, who would you choose out of the two? And I said, I would have chosen the person who was better qualified, who was Rishi Sunak. And the person who spoke to that I was speaking to or asked me this question was in politics, and she had backed Liz Trust. Interestingly, and this is look, let's not get political, let's because that conversation goes on to other things altogether. But I think that they didn't select the person who was best suited to the job because they're looking after their own party politics. As sad as it is, they should have put the country first and put the best man in the job. And that isn't the perfect, choice to make because of everything that has happened. But Rishi wouldn't have done this. He wouldn't have scored this own goal if he had won the leadership contest. That you and I, everybody watching this on replay and live, never got to choose. It is madness. It's absolutely crazy. Okay, I've already read that one out. I'm just scanning the comments right now, guys. Like the video, everyone. Yes, if you haven't liked the video, please smash the like button. It will just mean that other people get to see this as well. I appreciate those of you already on here. I wouldn't touch the stock. Oh, so this is a comment. I wouldn't touch the stock market personally, and the way pensions are going, you'll be lucky to have any money in the coming future. I think you're wrong there. I think at the end of the day, the markets have always returned extremely well in the long term. If people are talking about, there was a comment earlier which I basically glanced over because it's just full of nonsense, and I don't want to like entertain that kind of stuff. It's like you will own nothing, you'll be happy. Well, if that's how you want to live your life, then that's your thing. But ultimately, for you to have financial security, you need to acquire assets. If you don't acquire assets, be it in stocks or property or whatever it is, you're fighting a losing battle. That's just the way the world works. That is the reality of our capitalist society. So when you think about the stock market are the businesses that make the world click, that run the world. iPhones, communication, energy, food, water, utilities. This is all the stuff that we need to live as human beings. If you don't invest in those companies for the long term, it's your loss. So I don't agree with this comment at all. I think that the stock market is still a great place to be. But with the stock market, you have peaks and troughs. You're always going to have recessionary periods. And we are in one right now. And there will be a boom period again. The question is, are you going to be involved? Are you participating to enjoy the growth on the backside? People always talk about things when things are going well. It's great to talk about the stock market. I mean, here on YouTube, right? Where are the stock picking guys right now? Where are they? Where are the stock guys telling you, yeah, you can make X amount of money on AMC and GME? Where are they? Show them to me. They're all silent because this is a recessionary period. This is where the guys who are serious about building generational wealth, creating wealth for the future, you're doing it quietly. This is what you've been waiting for there to be a market crash. You've stacked some cash and you're going to put money in, knowing that it's going to pay dividends in the long run. That stock picking, make money quick, yeah, that's great when you're in a bull market. We're not in a bull market right now. If anything, market sentiment is bearish. So the stock pickers aren't talking about all this sexy stuff anymore. And that's why I never spoke about any of that on the channel, because ultimately you have to understand that markets come with cycles. And if you're going to be serious about investing, you got to be prepared for the good and the bad, the bull run and the bearish market. Let's have a look. I think Liz Truss is trying to stop. Let's have a look at this. I think Liz Truss is trying to stop the rot, give them a chance for doing something different. Hey, listen, I 100% will say that there were some good things in the budget. And the video on Tuesday highlights a lot of them. I think they scored a massive own goal by, I think, being a little over enthusiastic. They never even consulted the Office of Budget Responsibility to see if the costing for this would actually make sense. Like, that's just incompetence. And I have no doubt that they would have had the best of intentions. But the execution for this has just been poor. And when you think about poor execution, there are consequences. And unfortunately, those consequences aren't just like, it's okay. This is impacting people's pensions. Imagine you have a mum, a dad, a grandparent right now who needs to draw income from their pension right now. Over the last week, they've probably lost what, 10 grand, 15 grand off their pension. That's real income that they need to live. For some people, that's a year's worth of income. So at that level of operation, you cannot afford to execute poorly because people are dependent on you. And that's where it baffles my mind that they didn't do the right things. And it feels as though they've skipped so many steps. And that's why they're getting such a tough ride, and rightly so, because their decisions have consequences for ordinary people. And it's a shame because politicians, they can't always be honest with people. They can't always say, look, we're up a creek without a paddle here. This is what we really need to do, because it won't go down well with people. Sometimes people don't want to hear the truth. That's just the reality. And to a certain extent, you're damned if you do, you're damned if you don't. You can't please everyone. So no matter what you do, a, a swathe of the population is going to be unhappy. I completely get that. But even with that being said, that's even more reason for you to execute perfectly. And I don't think that they've done that, even though they had some really, really good stuff in the budget. I'm just scanning again. Uh, Again, I don't know how. Look, everything that they've done, even from a technical point of view, was never going to save the pound ever. And look, if they'd gone to the Office of Budget Responsibility, they would have seen how that wouldn't have worked. So I don't necessarily agree with that at all. I think that again they had the right intentions, but the execution has just been really, really poor. Yeah, you're saying you're 16K in debt there. I mean, I would encourage you, mate. I mean, what depending on what kind of debt it is. Sorry, try and come up with a plan for that really specifically. Because yeah, I mean, the repayments for it, if you can streamline the repayments for that, put some more money in your pocket, disposable income in your pocket by doing so, that will really help. Especially if you feel like you've got pressure at the minute as well. Yeah, someone is saying on here that investing is much better than storing cash. 100%, you're right. If you're storing cash, then you're leaving your money to basically wane away with inflation, and that's not going to help you in the long run. Help your money keep pace with the price of things going up. I mean, that's the minimum target, really. To be honest, whether you're saving or investing, is to keep up with inflation. All right, I know there's a lot of conversation here. I'm just scanning the comment section here. All right, so let's have a look at this one right here. So REITs, yeah, I mean REITs is in property, so you have to ask the question around property and what's going to happen with property. Um, the property markets, the forecasts are, that next year it's going to fall 10%. I think as an asset base, physical, you can touch it, feel it, right? I think property is great. Um, and I think that could be a really good option for people to invest in. But you still have to understand that even if you want to invest in property, you can still have market cycles. Property still has market cycles, so you could still have a market correction in property, but at least your money's invested in bricks and mortar that you can touch and you can feel. Thank you for this. Thank you for watching. I appreciate you 100%. Someone's saying here, I don't own a house, I rent, and I retire in 17 years' time. My credit record is wrecked. My debts are the bank's problem. Um, what do you mean by that, mate? I mean, if you're going to retire in 17 years, I mean, I don't know your personal situation personally. Um, and I don't know whether you got pensions or anything like that. So it's hard for me to give any kind of like tangible, contextual kind of comment here. But I think, with your credit scores are relatively easy to repair depending on what's on your credit file. So there are things that you can do to make things better. I guess really the question is, do you want to? That's really the question. Some people have no interest in doing anything. Some people just think, you know what, I can't be bothered, and I completely get it. You know, I struggled with debt for 15 years. My credit score was shocking, but I would say that I was much younger than I was in my 20s then, and I knew that actually if I wanted to buy a house or wanted to get a car or anything like that, I needed a good credit score. So I was forced to kind of look at it. You've got to be willing to have a look at it. I don't know where you are in terms of your life journey and what your outlook is, but the question is, do you want to do something about it? Because if you do, there are things that you can do to repair things like, you know, your credit report and stuff like that as well. Gold and silver, someone saying here. I mean, the last time I checked, I had a notification, I think it was yesterday, that gold was down. I'm just going to have a look quickly. What's gold saying today in the commodities? Um, Gold at the moment is at 1,668 at the minute. Where was it? What we saying for what's the week chart looking at? Yeah, it's down from where it was before, but gold's still at 1,668. I mean, gold is a good diversifier, right? So it's a commodity of limited supply. It's a finite resource, right? So it is there as a potential thing, as a store of value, but you're still going to have the fluctuations in the price. The idea behind gold, though, is that if the stock market does a -4, -5, -10, gold is unlikely to do that, because you would imagine if people are pulling their money from the stock market, they're likely going to go into gold, possibly pushing the price up. Back in the day, we used to talk about a seesaw effect, right? That if you would invest in different asset classes, like, you know, your equities and your bonds, safer assets, riskier assets, as riskier assets kind of went down, you would have your safer assets go up. That theory's kind of gone out the window, unfortunately, over the last 10 years. It feels like nothing correlates anymore, and you just kind of have to do that and kind of guess what's going to happen. And it's problematic because it means you've got to guess more. I'm just looking at the comments. Bear me one second whilst I do that. Uh, so I don't know whether someone's asking me recommendations for gold or silver. I mean, look, you can do either or. It's really dependent on which one you think, you know, you would go for. But again, just have the expectation that, you know, these prices will still move. Let's have a look at this comment. So yeah, bear markets are great if you know where the deals are. Look, the easiest way to approach this is to say, look, if this is a bear market, right, and you're looking at S&P 500, Nasdaq, FTSE 100, FTSE 250, looking for the deals, right? Okay, so if you're looking for a deal, you can just look at the index and be like, okay, look, is it down? What is the outlook? What's the news saying? Where do you think it's going to be after we come out of this bearish thing? You can just go buy the index. That's the easiest thing for you to do. If you want to start looking at deals when it comes to like individual companies, then you've got to do a lot more research around what companies you're going to pick, sectors, all that kind of stuff. So that's probably a little bit more. But I invest in a lot of index funds and ETFs, as you guys already know. Yes, I've got some individual stocks. I've got an individual stock portfolio, but I invest in index funds and ETFs. So that captures an entire market. So if you are pound cost averaging into an entire market like the S&P 500, for example, well, if it's down to an all-time low and you're paying money in, yes, you would have lost on some of the money that's already gone in, but at least you're acquiring units on a lower price as you keep going up. Well, as you hope that it goes up, coming out of the bear market into a bull market. Um, you've got to be in it to participate. Really, you've got to be in it to win. Yeah, someone's talking about mortgages here. Yeah, that is 100% right. Kiwi time. Like I said, I do a separate video on mortgages. I'm really conscious of time because I've got to jump on a live on IG, on Instagram in about 15 minutes. So I'm gonna just scan these comments very quickly and see if there's anything else that I can pick up. But thank you so much for the engagement. I really, really do appreciate it. Thank you. And if you do have questions, maybe what I'll do, uh, before I say it, can I do it? I might be able to do it on Sunday. So just keep your eyes peeled. We might do a proper Q&A on Sunday evening, maybe around 7 or 8 o'clock. I will post. I will. I will post something beforehand, and I'll try and do it on Saturday if I can do it on Sunday. There's a lot going on at the moment for me, so it's the time, finding the time to do these things. So I will try my best, but maybe we can have a more in-depth conversation on Sunday via a Q&A where we can really get into it. And by then we should know what quasi content, if he does announce anything on Friday, what he announces. Hopefully it won't be further cut to spending, to public spending, because I think if they do that, that's going to be unforgivable. I think they're gonna find it hard to win the next general election anyway. I think this has been some kind of nail in the coffin. I just think that would just finish it all off, really, and end all hope, really, if they did that. But hopefully they don't. Hopefully they don't, but we'll see. But I appreciate you guys. Thank you so much. There are so many comments. I appreciate you. If you haven't already, please smash the like button on the video. It just means that other people like you who weren't able to tune in live, this will get recommended to them by the YouTube algorithm. It's weird how the algorithm works here. If a video goes live and there aren't that many comments, or there isn't that much engagement, YouTube thinks, oh, people don't like this, and it just tanks it. It doesn't share it. So if you like it, it will just mean that it will get spread out and shared to other people like you who may actually find a lot of the stuff that we've spoken about interesting. There are 92 of you on here at the moment. If you haven't already subscribed to the channel, this is the kind of stuff that I do. So consider subscribing if you will. I appreciate you. Thank you so much. I've got to go jump to an IG live now. I will catch you later on. Cheers.